Good morning, everyone. I appreciate everyone coming on today's webinar presentation. My name is Sean Brink. I'm one of the annuity marketing coordinators here at Insurance Agency Marketing Services. And I'm very excited to see so many people in attendance today's webinar. We do have a good webinar presentation designed for you today. We are going to have with us today Mr. David Royer. He's the National Sales Director for Guaranty Life. He's going to be talking to us today about some of the products that his company has developed and has been finding success with to help agents, primarily with some long-term care annuity alternative type products, as well as long-term care annuity products, as well as a multi-year guarantee product that's been very successful. Just a little bit today on the agenda. We will take just a couple minutes here at the beginning of the webinar today to talk about just a few things that insurance agency marketing has been finding success with. So I did want to make sure everyone knows that. Well, I'll just take maybe about 5 minutes of the presentation, and then I will pass the reins over to Mr. David Royer to really get into the meat and potatoes of this webinar that we're having today. Just a little bit on housekeeping items. Bear with me one second. All right, I'm back. Just a little bit on housekeeping items. Everyone in attendance today is on listen-only mode. That is designed specifically that way to keep down the background noise so that everyone can hear the material that's being presented clearly. If you do have a question during the webinar, like I said, since everyone's on listen-only mode, do post your question in the question box that should be on your screen, and we will make every attempt at the end to do a question-answer session and answer as many of those questions as we can for you. So without further ado, we will go ahead and get started today. Again, thank you everyone for being in attendance in today's webinar presentation. Again, my name is Sean Brink. Just a little bit on IAMS. We do offer periodically life and annuity training academies, and I do want to make sure everyone's aware that we do offer these periodically. We cover all the expenses for flying you out to these academies, as well as hotel stay while you're there and your meals. These academies that we offer periodically are designed for agents who are looking to take their annuity and life production to the next level through the use of new sales ideas, concepts, and techniques. We do have our next one in just a couple of weeks. Unfortunately, the registration period for that event has closed, but we do offer them periodically. So again, just wanted to make sure everyone knows that we do offer these. If anyone is interested in getting information on our next Academy training as when the dates are organized, that sort of thing, please mark yes or no on the question and answer box that is presented on your screen. We'll make sure and do everything we can to get that agenda and application out to you as soon as those dates are established. Like I said, we do cover all the expenses for those, and the agents have attended these in the past, have seen quite an increase in their annuity and life production after they've attended these academies. They're not annuity or life 101. They're more designed for the agent already involved with annuity and life sales who are interested, like I said, in taking their annuity and life production to the next level through these new sales ideas, concepts, and techniques. I will keep that pull up for just a couple more seconds, and then we'll go ahead and close that. But I did want to make sure everyone has the opportunity to mark yes or no on that. Let's see. All right, I'm going to keep it open for just another 5 seconds or so. If you haven't marked yes or no, please do so that I just know who needs to get the information for our next Academy. The dates for the next Academy, like I said, are not yet established after the one that we're having in a couple of weeks, but we're anticipating it to be right around the February timeframe for next year. All right, I am going to close that poll question at this time. Appreciate everyone taking the time to complete that questionnaire, and we can go ahead and go to the next slide. Did want to make sure everyone's aware we have a new producer bonus program. If you're newly contracted with us, or if you're considering becoming one of our contracted agents, we do offer additional compensation in addition to normal commission payments that you would otherwise receive for selling business with us. We do offer this additional compensation to help get you up and running with us. As you can see, during the first 180 days of being contracted with us, if you attain the $100,000 level with index annuity premium at least $100,000, then you can collect an additional $750 in cash or a choice of a couple of other options if you choose. If you do not choose to claim that $100,000, but wait until you're at $300,000 or $500,000 within the first 6 months of being contracted, we can, as you can see, the awards do go up exponentially as far as what we're willing to give out, in addition to, like I said, the normal street level commissions that we offer everyone here at Insurance Agency Marketing. So I just want to make sure everyone's aware that we do have this additional incentive for new agents who are interested in coming on board with us as contracted agents. Next slide, please. We do have now in-house an entire creative department. For some of you that may have been with us for quite a while, I don't know if you're aware, this is kind of a newer program that we are offering here at Insurance Agency Marketing. Just want to make sure everyone's aware. If you're looking to get any sort of creative services done for you, print marketing, radio, television ads, tailored to your specific needs, your specific office, marketing supplies, mailers, anything at all, we do offer that at a steeply discounted rate for those that are contracted with us. We do, like I said, have a creative department dedicated to this process. The person that's in charge of that department is Mr. Matt Neal. He is our creative director, and he's always happy to talk to anyone that might be interested in getting some customized marketing materials made at a discounted rate. For those of you that have been producing with us, your marketing reimbursement dollars can be used towards this program as well. So feel free to give us a call. I'd be happy to get you right over to Matt Neal if you'd be interested in learning more about what exactly he can do for you in that regard. Next slide, please. Did want to make sure everyone's aware we do have a referral bonus program. If you have been with us for a while and you're happy with the service that we have been offering you as a marketing organization, if you have any other people in the business that you think might benefit as well, do feel free to give them our contact information, have them call in, or call in yourself and give out names and addresses of anyone that you feel might benefit from us. As you, I'm sure, do in the field as well, we get a lot of business from referrals that come over to us, and we do reward those that do send those referrals. So as you can see on the screen, if you do send a referral to us and they contract with us, we do send you a $50 reimbursement for that right at that point. And then as they start doing business with us, you do get ongoing trails of all business that they submit. And that doesn't mean that you have to supervise them in a way or that the other referred agent gets less commission. It's just something that we pay in addition for agents who are looking to make a little bit extra through referring other agents through us. We do have agents that have easily four-figure checks that they get from us on a quarterly basis. And like I said, for no work that they do other than providing names and numbers of other agents that might be interested in working with us. Next slide, please. Did want to make sure everyone's aware we are still in the qualification period for our next awards trip, which is a golf and gamble challenge out in, I believe, the Las Vegas area. This one is specifically for a Athene-sponsored event, so if any of you are interested in producing through one of our carriers, Athene, only $1,250,000 in annuity premium dollars will qualify you for this all-expense-paid trip that we're having later this year in 2017. The qualification does run all the way through the end of the year 2016, so there's plenty of time to qualify for that. And just want to make sure everyone's aware that that is going currently, and we are seeing a lot of interested agents who have already qualified, and we'd love to see many more qualify as well before the end of the qualification period. Next slide, please. Looks like we are ready to pass the reins over to Mr. David Royer. Again, Mr. Royer is the National Sales Director for Guaranty Life, and he has three great products that he wants to talk to us about today to meet some different needs for clients. They have some great competitive products for different needs that the clients are looking to meet. And so without further ado, I will pass the reins over to Mr. Royer at this time. Mr. Royer, you're on the line with us?
Yeah, I am, Sean, and thank you very much. I'd like to start out by thanking all of you again, as Sean did, for being on today. This part of the presentation is going to take roughly 40 minutes, and we're going to be going through three very unique niche-type products. Before we get started, I just wanted to let everybody on the line know that at Guaranty Income, we are very pleased to be working with Insurance Agency Marketing Service and Sean, and they're great people, and they're one of the premier marketing companies in the United States. So, Sean, appreciate the opportunity of speaking with your folks today. The three products that we're going to go over today, the first one is AnnuiCare. AnnuiCare is simply an annuity that triples in value to cover long-term care expenses. So, for example, if your client deposits $100,000 into AnnuiCare, they will immediately have $300,000 of tax-free money to pay for long-term care expenses over a 6-year period. Second product's relatively new, FlexPlus. And FlexPlus is a product, it's an annuity that actually generates real additional dollars to help offset long-term care expenses. But the charm in this product is this one's a guaranteed issue. See, AnnuiCare on the top is an underwritten product, but FlexPlus is for those that cannot qualify. And then toward the end, I'm going to just give an honorable mention for our 4-year multi-year guarantee. And the charm in this product is that it's issued all the way through age 100. You know, there's a lot of people that bought annuities years and years and years ago. And back then, annuities had what's called a maturity date, and they were typically age 90 and age 95. Well, if you think about it, if somebody kept their annuity that long, they probably never planned to spend it. But what's happening to them today, they're getting letters from the insurance companies saying, hey, we appreciate your business. Congratulations, your annuity has matured. Where can we send the money? And the 1099. So what's happening is they're being kicked out of their annuities. And frankly, between age 90 and age 100, we're probably the only company in America that will issue anything. Also, that 4-year MIGA has the highest 4-year MIGA rate in the industry. But let's get started. Pardon me. I want to talk a little bit, we're going to start out a little bit negative. I want to talk about what's going on in the long-term care industry. But before I get into that, I want to make a mention of something. As financial planners, we typically try to accomplish 3 goals for our clients. One is to keep their money as safe as we can. And the second is to grow their money as fast as we can. And the third goal is to provide an income that they cannot outlive. This is essentially what an annuity or a fixed indexed annuity does. But something I want to point out, here's the missing piece of the puzzle. If we do an excellent job at those 3 things, but we miss that long-term care piece of the puzzle, we may be protecting their money, growing their money, and generating income that all will wind up in the hands of the nursing home. So, folks, that's why this is so important. And right now, America's in a long-term care crisis. And let me just describe what happened. You know, we know interest rates have remained historically low now. Everybody keeps saying 6 years, but you know what? It's been almost 8. And interest that is earned by the insurance company is one of the factors in how much they charge in premium. At the same time, nursing home costs are soaring. It was estimated last year that the average cost of a private room in this country was over $90,000 a year. People are living longer, which is putting more strain on the long-term care system. And as a result, we've seen some very dramatic increases in long-term care premiums. Not unusual for somebody to have a 20, 30, 40, 50, in some cases even 100% premium increase. So as a result of all of these negative forces that have kind of come up like the perfect storm in the traditional long-term care industry, we've seen underwriting tightening. It's more difficult to qualify than it has been in the past. And we've seen many traditional long-term care insurers exit the market completely. We believe one of the solutions for some of your clients is going to be AnnuiCare, which is simply an annuity that also provides long-term care insurance. The beautiful thing about this approach is it doesn't require any out-of-pocket premium. It's just a matter of shifting a dormant asset or an underperforming asset or maybe an asset at risk, shifting it into this annuity, and it immediately triples in value for their long-term care expenses. A uniqueness at Guaranty Income is we offer 3 plans to choose from. We have AnnuiCare 10 that's on a 10-year chassis, in other words, a 10-year surrender period. It starts at 9 and decreases linearly. This is issued through age 79, and the current rate is 3%. And I think you'll all agree, in today's low interest rate environment, 3% is a pretty good starting rate. For your older clients, we have AnnuiCare 7 and AnnuiCare 5, both issued all the way through age 85. And if you look over to the right, you can see that the AnnuiCare 7 interest rate is 2.75, and the AnnuiCare 5 interest rate is 2.5%. Now, something I want to make real clear here, because there's usually a little confusion after these webinars about, well, what happens after the 10 years or 7 years or 5 years? I want to point out that's just the surrender period. Once they have AnnuiCare, they have it for life. And I also want to point out that these interest rates you're looking at here on the right side, they're not locked into these rates. And the reason is Guaranty Income uses what's called a portfolio renewal style. And all that means is as interest rates in general trend up, your clients' renewal rates will trend up as well. Now, if interest rates trended down, I don't know if they can go any further down, but if they did, those interest rates would trend down. The point is, these interest rates are going to remain competitive in any interest rate environment. So again, as interest rates in general trend up, that AnnuiCare 10 that's currently 3% could renew higher. Now, I also want to point out this concept of attaching a long-term care rider to an annuity. This was developed by Guaranty Income. So AnnuiCare is the original annuity-based long-term care. It's offered exclusively by Guaranty Income Life, and it's geared toward both annuity and long-term care producers. And because experience in this market area is everything, I want to point out again, this is the first annuity combo product introduced into the independent distribution system in America. And we actually introduced this product 17 years ago in 1999. Now, question may come to mind, why would Guaranty Income, back in 1999, create an annuity that also offers long-term care benefits? Well, we studied the demographics, and I want to share them with you. What we learned back then is that, and it's gotten worse today, 85% of Americans age 65 and older don't have long-term care insurance. But folks, if you get down to around age 60, which is kind of the sweet spot for buying these types of products, 90% don't own long-term care insurance. So what that means is 9 out of 10 people in America that should have long-term care coverage have chosen not to buy it. Only 1 in 10 own long-term care. So the market's wide open. But to penetrate the market, first you have to examine why do 9 out of 10 Americans choose not to buy long-term care insurance, and how do you fix that problem? So in examining the issues preventing people from buying long-term care, the first thing we found out in our surveys is that they felt like it was too expensive, and they kept getting premium increases, and a lot of people just dropped their long-term care when the premium increases came along. We also found out that some people are finding it difficult to qualify because underwriting's become more rigorous and lengthy. Matter of fact, somebody 10 years ago that may have easily qualified for long-term care, same person, same age, same health condition today, may find themselves in that decline column. And those are good reasons for people to hesitate to buy long-term care. But we dug a little bit deeper, and what we learned, the number one reason 9 out of 10 Americans don't buy long-term care insurance is because they're reluctant to pay ever-increasing prices for something that they may never use. So the consumer has a mindset that has to be overcome, and that mindset is long-term care is pretty much a use-it-or-lose-it proposition. In other words, if I don't use those benefits, if I don't get sick or injured, have cognitive impairment, and I never need to use the benefits, I have lost my premium. So I think particularly for retirees, they don't see that as affordable. And so the point I want to make right now is that AnnuiCare solves that problem, and I'll get to that in just a moment. But first, what is the end result? The majority of retired Americans are self-insuring for their long-term care needs and essentially gambling with their life savings. Now, when I say self-insuring, a lot of people are self-insuring and don't realize it. So many of your clients today are self-insuring. They don't know it. They're self-insuring because they chose not to have any form of long-term care. So again, all that money that we protect and grow and try to generate income with may all wind up in the hands of a nursing home. So here is what we decided back in 1999, and we still believe this today. You can't fight 9 out of 10 Americans. And we decided back in 1999 we're going to join them. So we developed AnnuiCare as a better way for them to partially self-insure, a way where their money's going to be safe, there is no market risk, they have liquidity, it's a deferred annuity, so it's growing tax deferred. But most importantly, the AnnuiCare rider triples the value of the annuity to cover their long-term care needs. So I'm going to kind of explain how this works. And as we go through this, I'm going to share some sales techniques that some of the top, and incidentally, these techniques are not made around the boardroom at the home office. These are techniques that we got from our field and folks out there that are actually selling large amounts of AnnuiCare. And I called them and I said, okay, tell me how you're doing it. Why is it that you're writing so much more of this than anyone else in the country? So they shared their sales techniques with me, and I'm going to share them with you. This is one of my favorites. What we learned is that sometimes asking the right question will get you more sales progress than giving them mountains of information. So one advisor who's extremely successful in selling AnnuiCare, this is his approach. Mr. and Mrs. Jones, what if I could show you a way to protect your assets from the high cost of long-term care or catastrophic illness? And while doing so, you will remain completely in control of that asset. Should you become ill or injured, you'll receive 3 times the asset amount to pay for your long-term care needs. And if you never get sick, you don't have cognitive impairment, you don't get injured, this same money can be passed on to your heirs plus interest. And what if I could do this, solve your long-term care problems, and do all of this with no out-of-pocket premium from you? Would that interest you? Folks, that's a great door opener, asking questions and provoking thought. And so while we're on the subject of sales concepts, let me share another one with you. And they're all my favorites. This one really works well. We also learned that sometimes comparing something that your clients are not familiar with to something that they're very familiar with helps drive the point home. So here's a situation I want to describe to you. You have a client, maybe their total net worth is $600,000 or $700,000 or $800,000, whatever that number is. Maybe it's $1 million plus, and they don't own long-term care insurance. They've decided to self-insure. So they're going to set aside $200,000, which is just going to be a little bit more than 2 years of nursing home expense, but they're going to set that aside in case either of them gets sick or injured. That's the money that they're going to use to cover their long-term care expenses. Now, I want you to imagine that same prospect or client of yours that has that, they're standing on the street and they have that $200,000 in a big bag. Well, obviously that's not safe, but they have a reason. And the reason is they're looking for a place to deposit it, a safe place to put that money. In front of them are 2 banks. And the bank on the left, right over here, it has a sign in the window that says, deposit your money here, it's going to be safe, you'll get a fair rate of return. Should you become ill or injured or have cognitive impairment and incur long-term care expenses, you can come down to the bank. You may have to pay a little interest penalty, but for the most part, you can take your $200,000 out, it's your money, and use it to pay your long-term care expenses. What I just described is a typical bank CD or money market account. And folks, this is how a lot of people are self-insuring today. Then they looked over to the bank on the right, and they saw a similar sign in the window, but slightly different. It said, deposit your money here, it will be safe, you'll get a fair rate of return. Should you become ill or injured and incur long-term care expenses, you can come to this bank and not just withdraw the $200,000 that you deposited, but over a 6-year period, you can withdraw 3 times that much, in this case, $600,000 to offset your long-term care expenses. That's going to generate $100,000 a year for 6 years tax-free. So over here, we would have had $100,000 for 2 years. By putting it in Bank 2, you now have that $100,000 for 6 years. That's the tripling effect. So again, we're just comparing something that they're familiar with to something they're unfamiliar with, and that helps drive the point home. Now, I mentioned earlier, we believe probably the number one reason that 9 out of 10 Americans don't buy long-term care is because of that consumer mindset that it's a use it or lose it proposition. And I promised you that AnnuiCare solves that problem, and here's how it works. If your clients don't need long-term care benefits, they can get their entire deposit back plus net interest. Or if they were to pass away without using their long-term care benefit, 100% of their annuity deposit plus net interest will pass on to their heirs. So what we've done is we've eliminated the biggest objection to buying long-term care, and that objection is, yeah, but if I don't get sick or injured, I've lost all that premium. It's a use it or lose it proposition, and we switched it to this. You will have long-term care benefits if you need it, and your money back if you don't. Folks, that is the one single thing that we have found that can change that consumer mindset. What I want to do right now is just kind of walk through some of the nuts and bolts of AnnuiCare. And I'm just going to go through the concept, again, to show you how simple it is. So let's go, incidentally, the simplicity starts right here. The AnnuiCare is not gender distinct, so male and females are treated the same. And what I'm about to show you also applies to all ages. So let's go back to your client that has that $200,000 that they're self-insuring with. Recommend they put it into AnnuiCare. The moment they do, the AnnuiCare rider is going to generate an additional $400,000 of long-term care benefit. So if you add the two together, the $200,000 that they deposited plus the $400,000 benefit provided by the AnnuiCare rider, you'll see they've leveraged their $200,000 deposit into a $600,000 total benefit. Now, what I'm going to explain to you right now is very important because I'm going to refer to this later on when we get into another sales technique. Here's how benefits are paid. Remember, these people are already self-insured. So AnnuiCare, as I said, is a better way to self-insure. So what will happen during the first 2 years of illness or injury, first 2 years when they're on claim, that will be paid directly out of their annuity, penalty-free. For the next 4 years, it will be paid out of the AnnuiCare rider. So they're still kind of self-insured. They're going to spend their money first, but that's all they're going to spend. And then they've got this $400,000 corridor provided by the AnnuiCare rider to protect their other assets. So to determine how much they can receive per year, you simply take the $600,000 total benefit right down here, divide it by the 6-year benefit period. That generates $100,000 a year tax-free for 6 years. Folks, that's how simple AnnuiCare is. A more efficient way for your clients to self-insure. What does AnnuiCare pay for? Well, those of you that have any long-term care experience in your background, this will be very familiar to you. It's identical to traditional long-term care. It's going to pay 100% of the daily maximum for home health care, homemaker services, hospice services, maintenance or personal care, respite, assisted living facility care, Alzheimer's care, and of course the nursing home. And it will even pay up to 50% of the daily maximum benefit for adult daycare, which is simply a situation where maybe mom or dad got sick, moved in with the kids, and they have jobs, and they drop them off at adult daycare on the way to work and collect them on the way home. A lot of traditional long-term care policies have completely not addressed the adult daycare situation. So what does AnnuiCare pay for? Everything under the umbrella of long-term care. The next question would be, what has to happen before you can get benefits? What are the triggers? And there's two. And again, this is identical to traditional long-term care. Trigger number one is being able to perform at least 2 of the 6 activities of daily living, including bathing, eating, continence, toileting, dressing, or transferring. So those are the ADLs. Any 2 of those ADLs qualifies them to go on benefit. And then there's a single and separate trigger, and that's cognitive impairment requiring substantial supervision. I know that's a mouthful. That just simply means for cognitive reasons they're not able to function adequately on their own for a reasonable period of time. That alone would qualify them to go on benefit. So now we're going to jump into everybody's favorite subject, and that's underwriting. And I want to explain how Guaranty does the underwriting. For your clients that are 69 and younger, the entire underwriting process is done with a telephone interview by a registered nurse. For your clients who are aged 70 through 85, the same interview is conducted by a registered nurse, but it's a face-to-face interview. They'll call your client, schedule a convenient time. The telephone and the face-to-face interview last about 45 minutes. So it's very important to let your clients know that it is going to last 45 minutes. And during that interview, they're going to find out what medications they're taking, what conditions they're taking them for. They're going to give them a brief cognitive impairment test, and that's pretty much it. I think what you're going to like most about our underwriting is what we don't do. There is no medical exam, no lab work ordered, no body fluids taken, no medical records are ordered, no attending physician statements. You know, all of the things that slow down the underwriting of the underwriting process, like the exams and lab work and medical records, etc., we've replaced all of those with the telephone or face-to-face interview. There's also no substandard ratings. You will never have to go back to your client and apologize and say, you know what, you're well enough to qualify, but you're just not healthy enough to get a good rate. We're going to have to charge you more. They either qualify or they don't. And because of this very quick underwriting process, you can expect a quick response, and that's typically going to be 72 hours or 3 business days after the telephone or face-to-face interview. So let me just kind of lay it out for you in a roadmap. You take the application, it goes to Guaranty Income Life. We transmit the information to the long-term care group, which is the biggest third-party underwriter of long-term care in the industry. They get that information over to the registered nurse. They immediately will start to reach out to your client to conduct that telephone or face-to-face interview. And again, after the interview is completed, typically you're going to have an issue or an underwriting decision within 72 hours. Just want to spend a moment on the AnnuiCare premium limits. For non-qualified, the minimum deposit is $36,500, and that's just an annuity deposit. Remember, that's not a premium. They're moving money from one place to another, and that's going to generate a $50 a day room. The reason we go that low is because, there's a lot of people that bought traditional long-term care years ago, and maybe they got a $80, $90, $100, $120 a day rate or room benefit. They know it's not enough. They'd like to have more, but they're unwilling to pay more out-of-pocket premium. So just find that lazy money sitting in a CD or sitting in a money market account or money at risk in the market, transfer it into AnnuiCare. They'll get the additional benefit, and AnnuiCare will pay right on top of their current long-term care policy. We also take qualified money, and this is really important, because approximately 80% of the investable assets in this country are in qualified accounts. So the ability to accept qualified money is really a big edge. Now, obviously it can't stay qualified, but what we do is we spread the 1099 out over a 5-year period, so they don't have to pay the tax on it all at once. So, for example, if they want to use $100,000 of their IRA to fund AnnuiCare, they send in the $100,000. We're going to send them a 1099 for $20,000 that year. The following year, we'll 1099 them for another $20,000, and so on until the end of that 5-year period. It is all now non-qualified money. So again, accepting qualified money is a really big issue. Maximum deposit per insured is $300,000, and folks, that's going to generate $900,000 of tax-free money to pay long-term care benefits over a 6-year period. So more than enough to get the job done. Now, everything we've gone through so far, a couple of sales concepts, and we've gone through the nuts and bolts about how AnnuiCare works. What I want to do now is I want to talk about the fun part of this. I want to talk about the opportunity for you, and I want to talk about the AnnuiCare advantage. Now, it started with the pension. And incidentally, let me make this comment. Those of you that have heard company representatives speak before, and I know you probably heard hundreds of them throughout your career, we have this character flaw. We all say the same thing. My company's the best, and our products are the best. Instead of just saying that, I'm going to prove it to you. It began with the Pension Protection Act of 2006. It created a major tax advantage for asset-based or annuity-based long-term care. It provided for the tax-free funding of annuity long-term care products. So effective January 2010, the annuity proceeds used to pay for the rider, the AnnuiCare rider, are no longer taxed. Pardon me. Prior to that going into effect, the money that was used to pay for the rider, the portion of the interest they earned that was used to pay for the tripling effect, was considered a distribution from a tax-deferred annuity, and it would trigger these little nuisance 1099s. All that went away January the 1st, so now it's the premiums are no longer taxed. So from a tax perspective, I'd like to say AnnuiCare is Pension Protection Act compliant. It offers tax-deferred interest. The premiums, as I just mentioned, after January the 1st, 2010, are tax-free, and all the long-term care benefits are paid tax-free. So from a tax perspective, AnnuiCare truly offers the perfect tax combination. Now, I'm going to say, and again, I was talking a moment ago about how company representatives have a tendency to brag about their company and their products, and I'm no different, but I'm going to prove it to you. AnnuiCare eliminates the competition, and in this section, I'm going to show you who the competition is, and we're going to look at them side by side. So I want to show you how and why we eliminate the competition. The first thing I alluded to earlier is experience. We have seen some companies come and go in the annuity long-term care space. They jump in the market for about 2, maybe 3 or 4 years, and then withdraw their product. So staying power is pretty much everything. Guaranty Income, because we were the first, we have 17 years of underwriting experience, 17 years of high issue rates, also 17 years of policy owner and producer satisfaction. But here's the big one. 17 years we have not increased the cost of the AnnuiCare rider. The AnnuiCare rider today is the identical cost as it was back in 1999, 17 years ago. As a result of that, AnnuiCare offers the best rates in the industry. Another big advantage is some of the companies that we've seen come and go in this space, and some that are still in there, they have what's called a waiting period, and some as long as 2 years. So I want to explain what these waiting periods, and incidentally, AnnuiCare does not have a waiting period. All of these have the same 90-day elimination period, but some have a waiting period on top of that. So let me explain what a 2-year waiting period means. Your client buys that product today that has a 2-year waiting period, and tomorrow they become sick or injured, and they need care immediately. They would have to wait the balance of 2 years before they could even file a claim. After that, then they'd have the 90-day elimination period. And as almost all these products do have a 90-day elimination period. But let me give you the same scenario with AnnuiCare. They buy AnnuiCare today, they get sick or injured tomorrow, they can file a claim immediately and begin to receive benefits as soon as the 90-day elimination period expires. So no long waiting period is a big edge. Now what I'm going to do right now, I'm going to introduce you to the 4 companies that sell annuity-based long-term care. We keep these charts up to date. And we're going to use, you see up here at the top, a male, age 65. I've had a little flip there. Here we go. Okay. Male, age 65, who's depositing $100,000. The 4 companies, and incidentally, let me tell you why I'm doing this. The 4 companies that sell annuity-based long-term care, you can see here on the left, Guaranty Income Life's AnnuiCare, State Life has Annuity Care, Forethought has a product called 4Care, and Lincoln Financial Group has Lincoln Annuity LTC. I'm going to compare these, and the reason I'm doing it is because when you offer AnnuiCare to your client, I want you to be 100% confident that you're doing it because it's clearly the best in class. And so that's what this chart's really all about. We're going to compare it in 3 areas. Up here on the top, we're going to talk about how much long-term care benefit they get. Down here, we're going to talk about what the future cash values are at current interest rates. And then finally, what is the cost of the rider for that 65-year-old male? So that $100,000 premium with Guaranty Income is going to generate $300,000 of long-term care, but because of the net interest, by the end of the first year, that'll have grown to $306,000. And that's long-term care benefit. The lowest of the 4 is State Life, coming in at $253,000, and then you can see Forethought and Lincoln just fall in between. Then if you push this out 10 years, now your client's 75, the Guaranty Income long-term care benefit would have grown to $367,000. The lowest again, State Life at $289,000, Forethought, Lincoln fall in between. Now let's push it out 20 years. Now your client's age 85. This is very important because this is kind of the sweet spot for filing claims. The Guaranty Income total long-term care benefit will have grown to $449,000. See, what's happening is as the annuity value grows, as this $100,000 grows, because of net interest, the long-term care benefit grows as well. This time over here, Lincoln is the lowest, and you can see State Life and Forethought fall in between. So what I've shown you in this upper section here is when it comes to how much long-term care benefit do you get per dollar of annuity premium, you can see Guaranty Income is clearly leading the pack. Now let's use current interest rates and let's go down and see what the future cash values are. And here's why that's important. Somewhere between 30 and 40% of people that buy these products won't use it. And the reason I say that is because somewhere between 60 and 70% of all people are going to incur some long-term care expenses. So for the ones that never use benefits, what's going to be passed on to the heirs? Well, after 10 years, at Guaranty Income at current rates, that's assuming we stay in this low interest rate environment, there's $121,000. All of their deposit plus $21,000 gain passed to the heirs. Lincoln is the lowest at $101. That's a big spread. You can see State Life is at $105. 4Care is at $111. Now let's push it out 20 years. The Guaranty Income cash value or death benefit to be paid to the heirs will have grown to $149,000. Again, here Lincoln is the lowest at $103. The next closest one to us is Forethought at $124. It's still a big spread. State Life's at $110. So in this section, what I wanted you to see clearly is not only do we have the highest long-term care benefit per dollar of annuity premium, but the highest future cash values for those that pass away and the money pass on to their heirs. And then finally, you have to compare what are these companies charging, what is the cost of that rider for a 65-year-old male for $100,000. Guaranty Income charges 95 basis points, so less than 1%. State Life is priced theirs identically at 95 basis points. Forethought, I guess they're proud of their rider. They charge 1.5%. And you can see Lincoln's the lowest at 0.5%. You wonder, well, okay, why is Lincoln the lowest? Here's the reason. Lincoln only pays the full daily benefit for the nursing home. If they have home health care, they'll only get 50% of the benefit. So essentially, that's going to force people to go into a facility that maybe didn't have to go into a facility to get full benefit from their product. So that's why they're charging less. So folks, again, I went through this comparison chart for one reason only, and that reason is when you present AnnuiCare to your client, I want you to be 100% confident you're presenting the best in class. AnnuiCare also offers your clients the choice of dignity, and by that I mean it pays 100% of the daily benefit for home health care. This is really important. Folks, when you're talking to a prospect, don't talk to them about going to the nursing home. Talk to them about staying out of the nursing home, because this will pay a full daily benefit for home health care, and instead of going to a facility, you can have your health care needs catered right into your home. Excuse that clearing my throat. It's kind of hay fever season here where I am in Dallas. So I appreciate your excusing the distraction. In any event, here's a sales opportunity that I think is the most important of the opportunities that we've gone over. And the reason is, let me give you a little bit of background. Each year I attend the Intercompany Long-Term Care Summit. It was 2 years ago. I attended it in Colorado Springs, and I heard an actuary was quoting LIMRA, and what he said was really important. He said that LIMRA estimates that there's approximately $1.86 trillion in non-qualified annuities in force in America, and I'm sure that number's grown since then. But they also pointed out, for the first time, this money is staying right where it is. In other words, the money's dormant. Typically, when somebody's out of the surrender period, they're going to look around and say, hey, can I get a better rate? Is there a rider that I need? A lot of people will go from one annuity to the other to pick up benefits or better rates. Well, this time they're not, and here's why. Most of these contracts have a lifetime minimum guarantee of 3%. They're out of the surrender period, so the clients are thinking, well, I can't get a lifetime guarantee of 3% anywhere anymore, and if I get another annuity, I'm going to go right back into the surrender period, so I'm going to stay right where I am and enjoy my 3%. So, folks, what I'm going to show you is two things. One, how to eliminate the tax on a tax-deferred annuity, get rid of the tax entirely, and solve your clients' long-term care needs at the same time, and give some of these people who need long-term care motivation to move that money. So what we're going to do is we're going to turn a taxable annuity gain into tax-free long-term care benefits. So here's the scenario. Let's say that one of your clients or a prospect you meet has had an annuity for a long time, and let's just say it's $100,000 total value. But you find out after talking with the client that their original deposit or their cost basis was $50,000. Because they've had it for so long, they've doubled their money. Well, what that means is they have now a $50,000 taxable gain. Now, at some point, somebody is going to have to pay tax on this $50,000. If they die, their beneficiaries will pay it immediately. If they pull any money out of that $100,000, it comes out of that gain first, and they're going to get taxed. So this is going to be taxed. Here is the maneuver: 1035 exchange that $100,000 into AnnuiCare, and now it becomes an AnnuiCare deposit. Their first motivation for doing this is going to be, number one, there's a 9 out of 10 chance they don't have long-term care. So this $100,000 deposit is now going to generate $300,000 of tax-free long-term care benefit. So for a lot of these folks that have these old annuities, that in itself would be enough motivation to move that money, and it creates a 1035 exchange opportunity for you. But here's how we get rid of the taxable gain. For the roughly 70% that go on claim, the claims will be paid out of this $300,000 in a tax-free manner. Well, guess where it's paid from first? Remember I told you earlier that when they go on claim, it comes out of their annuity first, and it comes out of the gain first. It's last in, first out. So we're draining this $50,000 right through here in the form of long-term care tax-free claims. So assuming they use at least $50,000 in claims, what have we done to this taxable gain? We have completely eliminated it. So two things, two reasons to move that old annuity. One, to leverage your long-term care benefit, and number two, the possibility of eliminating the tax on the gain. So we turn a taxable annuity gain into tax-free long-term care benefits. Folks, this technique has moved a lot of that dormant annuity money that's sitting out there collecting dust and earning 3%. So I'm going to summarize AnnuiCare. Don't go away, because then we're going to jump right into the guarantee issue product. But we believe that AnnuiCare solves a lot of today's long-term care challenges. Guaranty Income offers more options. You have the 5, 7, or 10-year surrender periods. You have greater liquidity, and the ultimate and the first long-term care rider attached to annuity, the AnnuiCare rider. Now, what I'm going to do real quickly is I'm going to show you what an illustration looks like. And again, it's really sold by the numbers. Again, we're going to use a male, 65, $100,000 premium. The moment he makes that deposit, it's going to leverage a $300,000 long-term care benefit. On the left side, you have the current annuity interest. On the right side, you have it at the guaranteed at 1%. You can see the cost of this is 95 basis points. So out of their 3% interest, we take away 0.95. So they're still earning a net of 2.05. Daily maximum benefits $136 a day for 6 years. So if you go down here at the end of 5 years, their accumulation value will have grown to $110,000. Their long-term care benefit will have grown to $332,000. If you go down 10 years, I'm sorry, that was 5. If you go down 10 years, the accumulation value would have grown to $122,000. The long-term care benefit is going to always be 3 times whatever the accumulation value is. So now that's jumped up to $367,000. At the end of 20 years, they've now got roughly $149,000, almost $150,000. Their long-term care benefit has now grown from $300,000 to $449,000. Now that's at the current rate of 3%. But I want to show you, even at the guaranteed rate, you're going to see very modest growth, but you see some growth in the accumulation value, and that's just at 1%. And you will see some very modest growth, but again, growth in the long-term care benefit. And incidentally, Guaranty Income has never renewed anything at 1%, so this is a pretty far-fetched concept there. So that's what an illustration looks like. That's probably the easiest way to explain AnnuiCare to your client. Commissions on the AnnuiCare 10 through age 74, the commission's 7.5%. Beginning at age 75 on AnnuiCare 10, it drops to 5.5%, like most annuity commissions reduce at that older age, so 7.5%. So summarizing AnnuiCare, when you look at these type of products, there's 3 things to consider. One is the price of the rider, and I think I showed you we're very competitive there. The other 2 are going to be what are those future cash values, money that would be passed on to the heirs if they passed away and didn't use their benefit, the cash value. And then the other is how much total long-term care benefit the product provides. And folks, I believe with AnnuiCare, we've hit the target on all 3 of these issues. So now we're going to make a switch here. We've been talking about AnnuiCare. It's an underwritten product. But you know, you're going to have clients that have been declined, rated up, postponed, some perhaps clients that have health issues significant enough that they didn't even bother to apply for long-term care, or they got declined for AnnuiCare. I'm going to give you the solution right now, and it's called FlexPlus with Bonus Care 10. So I'll tell you a little bit about how this works. FlexPlus 10 is issued through age 79. The current interest rate is 3%. And all these products, incidentally, pay full accumulation value at death. So let's get back to the FlexPlus. For your prospects that can't qualify for AnnuiCare or any other form of long-term care, FlexPlus with Bonus Care 10 is a guarantee issue product. There's no additional cost. The riders I'm going to explain to you are built in, and there's no underwriting of any type. So anybody age 79 or younger can get this product. You literally can write FlexPlus on somebody who is currently in a nursing home. So let me explain how this works. Now, you're going to see some waiting periods on this product, but keep in mind, this is guarantee issue. So after the product is 4 years old, so say somebody buys it today, after they're 4 years old and they fail 2 ADLs, they can elect what's called enhanced annuitization, which means they can annuitize the annuity, but in some cases they can get over 200% of what the normal annuitization would be. So maybe it was going to pay $20,000 a year, well now it's going to pay $40,000 a year. After 10 years, if they fail 2 activities of daily living and they elect that enhanced annuitization, we're going to add in a 10% bonus, then initiate the enhanced annuitization. They could receive benefits up to 262% of what the normal annuitization would be. Now I know at this part of the presentation, this is a little bit confusing. And again, I'm going to use some simple numbers to clarify it. We're going to go right back to our male 65, $100,000 deposit. Current interest rate is 3%. So remember, there's no benefit for this until after the 4th year. So at end of policy year 5, their cash accumulation value would have grown to $115,000. Now, if they just decided they wanted to annuitize this, and they hadn't failed 2 ADLs, the normal annuitization would be $7,700 a year. But because we have that rider that enhances the annuitization, instead of $7,700 a year in this case, they would be receiving $14,000, almost 2 times as much. So let's go down to 10 years. The accumulation value would have grown to $134,000. If they just, again, they're 75 now, if they just decide, I'm going to turn that into income, it would generate $11,000 a year for life. But remember, if they fail 2 ADLs after 10 years, not only can they get the enhanced annuitization, but they can get a bonus of 10%. So we got $134,000 accumulation value. That would generate a $13,000 bonus. So now, instead of annuitizing $134,000, we're annuitizing $147,000, and because of the enhanced annuitization, it would be $19,000 a year instead of $11,000 a year. So what FlexPlus does through enhanced annuitization is it generates real additional money to offset long-term care expenses. And again, folks, all of these benefits are guarantee issue, no underwriting. So I want to say this, FlexPlus is the ideal product for your prospects that can't qualify for long-term care. And I'm going to give you a next to final sales idea. You know, those of you that have been in the industry for a while, you've probably got clients that have applied for long-term care and were declined, or maybe they were rated up so high they didn't want to pay the additional premium, or maybe their health conditions were severe enough they didn't even bother to apply. This creates a tremendous opportunity. Go through your files and find those people, and the conversation may go something like this. Mr. and Mrs. Jones, you know, 18 months ago, you both applied for long-term care, which is a very wise thing for you to do. But unfortunately, because of some medical history, we were unable to get you qualified. Well, I have some great news for you. We have something, it's new, it's going to generate real additional monies to help offset long-term care expenses. And here's the best part. You qualify, no physical, guaranteed to be issued. When can we get together? Folks, if you do that, you can generate commerce in your practice almost immediately. Commission for FlexPlus 10, quarter point less than the AnnuiCare. It's 7.25 through age 74. At age 75 on up, it's 5.25. So we think the commissions are very competitive. And just in kind of summarizing these two products together, Guaranty Income is the only company in America, to my knowledge, that offers both true annuity-based long-term care and also has a guarantee issue product for those that can't qualify. So that's AnnuiCare and FlexPlus. And we believe at Guaranty Income, we have built the best products, and you can offer them to your clients at the best price. Folks, here's my honorable mention about the Guarantee 4 product I talked about earlier. Guarantee 4 is guaranteed for 4 years at 2.4%. That is the highest 4-year MIGA in the country. It's issued all the way through age 100. So when you come across those prospects that are in their 90 plus and they still want to keep their money tax deferred and they're getting kicked out of their old annuities because they matured, you've got a home for them now. And we will always keep that interest rate competitive. Typically, our Guarantee 4 offers the highest interest rate on a 4-year MIGA in the country. So in summary, Guarantee Income Solutions, we have fixed annuities with great rates. Our interest rates are always competitive. We are the developers of the AnnuiCare rider, annuity-based long-term care that triples the value of these annuities. We now have the guarantee issue product, FlexPlus. Incidentally, all of the 3 products that we talked about today, except for the multi-year guarantee, has a portfolio-style renewal rate, which means, again, as interest rates trend up, their renewal rates will trend up as well. So we believe we have built products that are timely, innovative, and that can sell in any interest rate environment. Quick mention about the company. Guarantee Income has been around since 1926. As a matter of fact, we celebrated our 90th anniversary, and that was just this past February. When you call our home office, if you have reason to, you're going to talk to a real person. You are never going to be in your car in a school zone on your cell phone trying to figure out how to type in the first 3 letters of somebody's last name. Somebody's going to answer the phone and get you to the department you need. And because of that, most service requests are handled with one phone call. And folks at Guaranty Income, we have built innovative products that fit your clients' needs today. And I really appreciate your listening, and I'm going to turn it back over to Sean.
Great. I appreciate you taking the time to give us all that information today, Mr. Royer. And we do have some questions that are coming in. I'll go ahead, if you don't mind, I have a couple minutes. We'll try to see if we can field some of those questions if you have a few moments.
Absolutely.
All right. Let me see what we've got here. Let's see. We do have one, and I believe I know the answer to this, but I'm going to relay it over to you. I have someone out on the East Coast wanting to know if the product is in either New York or New Jersey.
The answer is no. As a matter of fact, we believe by the end of this year, we will be filing our products in all states that we're not currently in, with the exception of New York. So New Jersey, definitely on the radar.
Perfect. All right. And I had someone asking, they had noticed on the illustrations we were showing the rider at 95 basis points. Is that they want to know if that was the solid cost for the rider on the product?
Well, that's for a 65-year-old. Just like long-term care, the younger you are, the cheaper it is. So, for example, if they were 55, it would be 60 basis points. At 65, it's 95 basis points. At 70, it's 1.4%. And whatever that number is, age at issue, it's going to remain the same.
Okay. Sounds good. We're getting more state approval questions. We're getting quite a few of those. If you don't mind, everyone that's getting those, I can send out the state approval grid to everyone that has interest. So I'll make sure and do that because we're getting quite a few about different states. Most of the states that are being referenced, though, the product is approved in. Client or agent wants to know, notice he hadn't mentioned the commission for the 4-year MIGA. They were wondering what the commission was for that.
Well, the best way to describe that is that you don't have to pay us much to write that. I'm kidding, Sean. It's going to be in the neighborhood of 1%.
Okay.
But that's not the end of the opportunity, because remember, if you help a 90-year-old keep their money tax deferred, how old do you suspect their children are? They're going to be in their late 50s to mid 60s. So the real opportunity is when you help mom and dad, that kind of opens up the opportunity to work with their children as well, because it's typically their money that you're keeping tax deferred.
Absolutely. All right. Let's see. I do have an agent that was wondering, and I don't know if it's been approved for client use, but they were wondering if that competitor comparison chart that you showed can be used with their client appointments.
Well, yes and no. The problem with the competitor chart is it always has to be updated, because when you're talking about a competitor's rates, you have to be accurate. So we update that anytime there's a change in interest rates from our competitors or our interest rates change. So if they were to use that, they would have to be updating it as well, which means they're going to have to run 4 proposals every about 30 to 60 days and make sure the numbers are still accurate. But Shauna probably could get that in your hands and let you decide what's the best thing to do with it.
Absolutely, that would be helpful. All right. We're getting in quite a few others. Let's see here. Just to reiterate on the long-term care benefit of AnnuiCare, if the client were to pass away prior to using the benefit for long-term care, or maybe they've only been using their portion of the annuity, what would be the death benefit to the client in general?
Okay, if they use up all of their annuity, which is used first to pay the claim, there's no longer a death benefit because they've used the annuity up. However, let me give you another scenario. Let's say that somebody has AnnuiCare and they go into the nursing home or they need home health care for a 2-year period. Well, they would have used up, in all likelihood, all of their annuity value, and then they recover and don't need benefits anymore. For the rest of their lives, they still have the 4-year benefit from the AnnuiCare rider, and they're no longer paying any kind of premium for it.
Perfect. All right. Let's see. And if I'm seeing correctly, I don't believe there are any other questions that was coming in. Let me see. I can't remember, to be honest with you, David, if you had mentioned this when you're talking about the history of the company, but I have someone asking what the current rating of your company is.
The company is currently rated B+, and just so everybody knows, this is a size-based rating. About 6 years ago, AM Best came out with what's called the BCAR rating system. It's a numerical rating system, and it only applies to medium to small-size companies. So essentially, we have to have a much higher BCAR score to get the same rating that a larger company would have. But just so everybody knows, currently our BCAR score is high enough to make us an A-rated company, and we're visiting with AM Best a little bit later this year, and we anticipate a rating increase.
That's great news. All right. I don't see any other questions coming at the moment. I do apologize to anyone if I had missed it, but I will definitely be following up with everyone that's been in attendance today and make sure that all additional questions are answered. I can also, of course, run illustrations or get you anything you need to get you up and running with these products. I think there's a great market for it. And Mr. Royer, do you have any last comments?
No, hey, just thank you all for being on today. And I just say this, we're about to enter the final third of the year. And this is the time of the year where most annuities are sold, and I think there's a tremendous opportunity within your own clientele to find out who does and doesn't have long-term care, and there could be some additional annuity sales there, perhaps some low-hanging fruit. So I wish you all a great last third of the year.
Great. Thank you, Mr. Royer. And thank you, everyone, for attending today's webinar. And like I said, I'll definitely be in touch with everyone real shortly to make sure we'll get you up and running correctly. Everyone have a great, profitable day. Thank you.